Where are businesses in terms of raising wages? Is there the ability and the will to do so?
Well, wages are rising quite strongly by historical standards. So regular wages are rising the most since 2018. It's still only around 1%. So clearly at the moment, real wages are shrinking. Wages they probably can't rise much further because profit margins are stable. So firms are passing on all the cost increases all the input cost increases. But if they also increased wages at a faster pace, then their profit margins would start to shrink. So I think the strong wage increases that we're seeing at the moment are about as good as it gets for corporate Japan. And based on historical unemployment rate, it seems unlikely that wage growth will accelerate any further because even when the labor market was tighter before the pandemic than it is now, wage growth was not any stronger.
Marcel, just in terms of those numbers, though, we did get a lot of seasonality considering that the bonuses paid as well in the previous months. But I wanted to ask you, if you have a situation now where the government is forced to step in, like they are going to be when it comes to controlling the wheat import prices, so then it feeds through to the millers and then ensuring that the prices remain low. When you have a situation where all of the data suggests that there's going to be 10,000 increases in terms of all the different food prices, that restaurateurs are going to start increasing their prices. At what point does there become a breaking point, or are there already on the consumption side? Because of the weak wages growth that you're mentioning, are we going to see a significant drawdown in consumption in Japan moving forward?
Well, I think we will see a slowdown this quarter simply because of the high COVID numbers. We're actually a bit surprised by the strength of consumption last quarter. But I think the key point here is that the household savings rate in Japan is still very high. It was about 7% above pre-rise levels in the latest data that we have, which is for Q1. It probably fell quite a bit in the second quarter, but it's probably still around 3 to 4% higher than before the pandemic. Now, the key question is how long are households willing to draw down those savings? And obviously, the higher inflation climbs, the higher inflation get, and the lower consumer confidence falls, the less likely it is that consumers will start to draw down, will continue to draw down those savings. So I think that the risk is clearly tilted towards quite a bit bigger of a slowdown over the coming quarters. But I would still think that the consumption will continue to increase simply because services consumption is still quite a bit below pre-pandemic levels. So there's still scope for catch up.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.